This is the Definitely Uncertain podcast, brought to you by Gold Rock Capital. Each week, we look at how high net worth families can improve their lives, decisions, and investments in a deeply uncertain world. We always aim to provide practical information, even if we can't offer specific investment advice. Welcome to the Definitely Uncertain podcast. My name is Darren Rockman, and I am a partner at Gold Rock Capital, the 20-year-old multifamily office servicing high net worth families in Israel and around the world. So we are now about 8 months into the corona crisis, and the impact to global economies has been significant. That is true all across the West, the developing world, and here in Israel. And what I wanted to do today was spend a little bit of time talking about what is happening to the macro picture here in Israel. A lot of things have happened in the last 8 months, many of them unprecedented. And to discuss this with me, I've invited Matthew Salter onto the show. So hi, Matthew.
Hi, Darren. Great to be here.
It's great to have you. So to give everybody a little bit of introduction to Matthew, he was a macroeconomic advisor to Her Majesty's Treasury, which is a nice way of saying the British Finance Department. He then spent 8 years at the Bank of Israel as a portfolio manager in the Reserves Department. And as of the start of this year, he was being appointed as the trade attaché at the UK Embassy in Tel Aviv. Matthew is speaking in his private capacity and not in his official capacity, but he, as you could hear, has got a very significant and rich background in understanding macroeconomic moves. So, Matthew, the headlines have been screaming that the Israeli economy shrank 10% in the second quarter, and on an annualized basis, that's 10% in the first half and 28% on a year basis. So how much stress really is there in the economy right now?
Look, there's undoubtedly true that when we look back on this period, we are going to see, in terms of historical graphs, a volatility of numbers that means that every single graph that anyone's ever put out is going to have to be reorientated because the numbers just don't fit on it anymore. We've never had a period in economic history where economies are literally turned on and off every few weeks, which is what's going on. So to get a sense of what these numbers mean is very difficult, because that's effectively what you're doing. We saw it in the US as well. The reports were of a 30% plus increase in GDP. It doesn't make any sense because it's a short number annualized, so it's sort of magnified, and same here. So we have to look at the overall picture. We have to look at the end of the year, on an annual basis. Looking at these are great headline numbers, but so there is stress. The economies around the world are going through a deeper and sharper recession than we went through 10 years ago during the great financial crisis. And there's huge uncertainty because it's not a traditional economic stress. It's based on things that are outside our control. So, and that, what I say now is not specific about Israel. We are our numbers are very similar to numbers around the world in terms of the GDP.
Right. Where are the stresses in the Israeli economy at the moment?
So, look, the greatest stress. Israel has a number of advantages, first of all. Israel is a quite service-dependent economy. It has a large tech sector, and those have been relatively resilient during this crisis, and we've seen that all around the world as well. So they've been lucky on that. Another stress that is the mainly felt one, which comes back to perhaps unemployment, which we can talk about, is the public-facing service industry based around the leisure industry, hotels and restaurants. And when that closes down, that affects a sector of the population that is very distinct and very significantly affected by that. And that has possible long-term consequences on that sector of the population.
Right. Often the employees in that sector are lower paid employees, lower socioeconomic status, and therefore the impacts are much
one of the most fascinating statistics that came out after the first closure was the Statistics Authority here in Israel, the CBS, does an average wage of the workforce on, I think it's a monthly, I can't remember. And you're smiling, so you're probably aware of this. The average wage came out as a higher number after the first crisis.
Ooh, isn't that great? Fantastic.
Exactly. But what was that saying? That was saying that because the people that are still working, or you and me, professionals with experience, were still working, but we had taken out 20% of the population that was in low-paid works that weren't in that statistic anymore. So, and that 20% of the population is not just suffering in that 3-month position. The long-term consequences there of long-term unemployment, of becoming unskilled, becoming detached from the workforce, becoming demotivated, and a crucial part in their life, has possibly got implications both here in Israel but around the world that we haven't even started to factor in.
Right. So we've been through now 2 lockdowns in Israel. Both of them have been massively costly because the government has effectively put in programs mainly to support those employees who've been put on unemployment benefits. And as a result, the government deficit for the first 9 months of this year was over 100 billion shekels. And if you compare that to where it was in 2019, that was 31 billion shekels, so 3 times as much. And if you look at the debt to GDP ratio, that's gone from the sort of 60s, around 60%, to projected somewhere between 75 and 83% at the end of 2021. So those are moves that have been done in order to protect and insulate the population, which is obviously a wonderful thing. But what are the long-term consequences?
So the rating agencies don't seem too worried about this. The general line is, and it's definitely true, that Israel went into the crisis in a relatively healthy position. So the debt to GDP levels of 64% of whatever it was before the crisis started, if you look at comparable countries around the world, is relatively healthy. Right. So we can be seen to be in a good position compared to other countries, especially places like the United States. And there seems to be a relatively relaxed attitude about this, based on the view that, yes, debt to GDP levels are going to go up into the 70s, increase by 12%, 14%, whatever it is. But a strong economy should be able to manage those levels and not have serious long-term consequences. Now, this is based on assumptions that the economies around the world are going to return to a normal functioning level within the next 6 to 12 months. And if that's the case, then I think there's a good case not to be too worried about it, especially in Israel. On the other hand, the wall of government debt that is happening around the world as a consequence of this crisis, and the numbers are quite staggering in terms of the increases in debt, in terms of the trillions and trillions of dollars, is money that has to be repaid off at some point. And if there is a debt crisis at some point in the world, we are going to feel it in Israel, however we place ourselves in terms of the ranking of nations around the world. I think the big question for me since 2008 has been, how has the world absorbed this amount of debt without, with yields still where they are? And this is a question for the economics textbook somewhere down the road.
So there's been this buildup of debt globally, but in Israel, we're in a slightly different position because we don't have a reserve currency like the US dollar or even the euro or even the Japanese yen. And here we are building up these significant debts. One of the issues that developing countries have had historically is when you build up significant amounts of debt like this, otherwise afterwards you end up paying the price. What are the prices that we're likely to pay? Are we talking about higher taxation? Are we talking about significant cuts in government services? What should we expect over the next 5 or 10 years as we try and pay down some of this debt?
One of the natural consequences of higher debt is you go into a period of lower growth. I mean, first of all, you have to use some of the money to pay off the higher debt levels. You have effectively front-loaded growth by spending now for further down the line. There's going to be less money to spend. One of the outs of this is also higher inflation. You get higher inflation, and it takes down the nominal level of your debt. And my view on it is, and people have been saying it for years, so it's not a new view of inspiration or something like this, but I just don't see how we can't have higher inflation down the road with the sort of debt levels that we're seeing, as a natural government response to say, look, we need to clear off these debt levels, and obviously higher inflation then has significant impacts for economic growth going forward. Look, we've been going through lower economic growth since the financial crisis. The fact that this should delay our return to a normal growth path for another 10 years or something, I don't think would be by any means unexpected after this.
Right. Okay. Now, one of the things that the government's had to do, obviously, in order to fund these payments is take on additional debt. Most of the debt that the government's taken on over the past 6 months or so has been 1 and 2 year debts. So not long-term debt as has been done in other countries. So why is that being done that way? And is this a good thing? Because there has been voices saying that this is a bad policy.
Look, it's your classic financing decision as to whether you take on short-term debt, you have low interest rates, and you believe you're going to be able to pay that off and you have lower costs, or whether you look in the security of longer-term debt, and there as a result, then you have slightly higher rates to pay it off at, but you've got that security. I haven't followed closely the arguments for one way or the other. I think Israel probably has a harder job of raising long-term funding, though it has succeeded. It has had a tough couple of long-term bond placements recently. But generally, there might be a shorter-term attitude in Israel about this. We are famously short-termist in Israel in that, we say, let's deal with what's happening today. Who knows what's going to happen tomorrow? So I don't see any major problems with that if we continue to operate in a low-yield world. Obviously, if that changes, then there's going to be significant questions as to why we took on short-term debt and long-term debts, as opposed to taking on long-term debt.
Right. Okay. So when you look at the other unusual things that have happened in the past few months, one of them has been the purchase by the Bank of Israel of debt in the market. They've gone in and they have bought the debt of Israeli corporates in a move that has frankly been absolutely unprecedented. They started off announcing that they would buy 50 billion shekels worth of debt. These are hard numbers for regular people to grasp. And now it's been increased recently to 85 billion shekels worth of debt. And this is obviously following the tactics of central banks around the world. You've seen it in the United States. We've seen it in Europe. We've seen it elsewhere. Just explain, why is it that the Bank of Israel is doing this? And what are the long-term impacts of that? Is this another hangover that we're going to have to deal with when this crisis passes?
Yeah. So it's very interesting about this crisis that we're going to is very different from the 2008 crisis, and this is not a financial banking crisis like last time. This is a good old economic crisis. Right. And what do you do in a good old economic crisis is if you're a central bank, you put down interest rates. That's what happens. You put down interest rates, traditional textbook stuff. But we went into this economic crisis with interest rates zero around the world. I mean, literally zero around the world. It's a staggering position to be in. The other difference between this economic crisis and the last economic crisis was the last one, the central banks were told, okay, this is a financial crisis. Go and put down your interest rates. Go and do your quantitative easing. And governments around the world weren't willing to open the spigots of financing and wanted to control financing. Yeah. We've seen the flip side come on this side. This time around, we've got an economic crisis. The central banks are saying, well, basically, we've got nothing left in our toolbox. There's not very much we can do. This is for you guys to handle. This is for the fiscal policy to come in and do something about it. And we'll do what we can. Yeah. Exactly. And we'll do what we can at the margins. And that's really where central banks are up to around the world. They can only do what they can at the margin. So the aim of the Central Bank of Israel is quite innovative in coming up with solutions. But, and I was having a chat with one of the journalists from, I think it was Reuters, about before the decision last week, what would they come out with? And will they come up with some surprise? And my view was they're quite good at that. But then we sort of put our heads together and thought, what could be the surprise? And, at the moment, it's intervene in the debt markets, try and get yields down, try and get companies out there to encourage them to carry on investing,
allow them to buy more cheaply.
Yeah, exactly. And there wasn't much more they could do. So in terms of long-term consequences, I mean, it comes back to this question. Japan's central bank is holding, I think it's 92% of Japanese government debt. I mean, we're talking about monetary financing of debt around the world in ways that every single economics textbook says shouldn't happen from a pure market point of view. You're distorting yield levels on a basis that is inconceivable. Couldn't happen without consequences like long-term inflation and high yield levels. Yet it's going on. So, are we going to feel the consequences of that down the road? Again, it comes back to this question. Either someone's writing a new economic theory to explain why not, which they are trying to do. I haven't, MMT is the new one that people are writing.
Yeah.
But I don't see anything that justifies it at the moment.
Right. Apparently, the lecturers that you had in London were the same lecturers that I had in economics in Melbourne. They all had the same orthodoxy, and it seems not to be working. As my wife regularly reminds me when I tell her how wonderful the economics profession is, or as the Queen was apparently quoted as saying, "How come nobody knew this was going to happen?" This was in 2008.
But I mean, it's wonderful in a way that traditional economics isn't working, because it allows governments around the world to go out and borrow in huge numbers, and yet yield levels stay rock bottom. Right. Central banks go and buy up the debt, so you don't even have to worry about the private market borrowing it. Yield and still, intervening in that, the yield levels stay down. Inflation's not going up, and everyone's probably saying, "Well, there you go. Economics is wrong. Thank goodness it's wrong, because otherwise we'd be in much deeper problem than we are at the moment."
Yeah. Okay. Let's just flip this towards the shekel, which is something that a lot of the listeners of this podcast are very interested in. So the Israeli shekel, despite the problems that we've had here, despite the incredible increase in government debt over a very short period of time, and despite the fact that the Bank of Israel is intervening in unprecedented ways, the shekel has strengthened significantly. We saw it hit below 340 a couple of weeks ago and stay down there for quite some time. So help us understand, why is it the shekel is so strong, and in a fool's errand, tell us where it's going.
I remember when I first came to Israel, and I made Aliyah about almost 20 years ago. And I told, where I was in cabs or talking to people, I said, I worked at the Bank of Israel. And, part of my job was on the local currency desk, the shekel. And it didn't matter who you talked to in Israel, everyone wanted to know what your view is on the shekel in a way that I never experienced before. I came from the UK. Most people wouldn't even have a clue where exchange rates were. There is an obsession in this country as to where the shekel is and what's happening with it. And I was actually in the trading room when we first intervened in the shekel, which is the Bank of Israel, which was back in, I can't even remember, 2009, 2008, but perhaps it was before the financial crisis. And then it was like an absolute shock. The Bank of Israel never intervened in the foreign, or hadn't intervened in its one specific direction in the foreign exchange markets. We were told, turn off our phones, close the doors. We started phoning up the local banks to intervene. And they thought we were like playing a prank on them, like what the central bank is like buying dollars. They literally weren't sure that, this was a genuine call. And now it's become like part of central bank policy in Israel to intervene at times when they believe the shekel is too strong. The problem is, we know the global currency markets are so vast. There's always been a recognition within the Bank of Israel that there's only so much impact you can have, and you've got to go at certain times to push it in the right direction. If you push against the tide, you're just going to be using up intervention bullets that aren't going to have any value whatsoever. And at the moment, the tide is pretty much only going in one direction, which is by the shekel. And why is that? What are the areas that are booming in the corona crisis? It's tech areas. It's, every type of tech. Israel is the land of tech and startup. There's no wonder there's money still flowing to Israel. They're still interested in Israel. We talked about the economic situation of Israel, low debt to GDP compared to other countries. Relatively, the shekel strength is not difficult to explain. So the question is, can we do anything about it? Is the central bank going to do something about it? They're obviously worried about it. There's obviously a limit to where they start to think seriously about what they can do about it. But how much can they affect it? We've seen that in the past. there's very little you can do about global currency markets unless you want to start thinking about pegging exchange rates, which is not a route that Israel's going down.
Right.
But there's very much they can do about it.
Okay. All right.
Well, there's no tourists coming, Darren, so we don't even have to. The tourists aren't complaining about it, right. So that's one little factor to worry about. So,
well, there's no tourists leaving the country either, so nobody can really benefit from it the other way.
That is true. That's true. So making
although cheap holidays in Dubai are certainly in our future.
Yes, not very near future, absolutely. No,
yes,
but the tourism thing's a valid one. We had 4 million tourists last year. That's staggering amount. If there's 4 million people not coming here, worrying about high exchange rate, that's an extra pressure off the central bank to have to intervene in that respect. So,
right. But on the other hand, you would think that the lack of tourists here reduces the amount of demand for the shekel because you don't have that many people coming in and asking.
You say that. That's an interesting myth. Outward tourism from Israel is greater than inward tourism. Israelis love to travel.
Okay.
The amount of overseas visitors coming to Israel is about half of the trips that Israelis make overseas.
Which would explain, in that case, some of the reasons why the shekel strength.
That's also another point. Yeah, I don't know how much tourism is as a percentage of overall flows, but yes, that's true. So.
All right. Well, hopefully we'll all be able to get on aeroplanes soon and see Dubai and all the other wonderful places of the world, and then come back happily and safely here to Israel. Matthew, thank you very much for joining Definitely Uncertain, and thank you to our producer Andrew Herman, to our editor Iro Schlesinger, and we look forward to seeing you on future episodes. Everybody be well.
Great to chat.
Bye-bye.